as well. The other big issue regarding the markets that we've been seeing from the last week is Sebi's order on Jane Street and how that has led to increased scrutiny and surveillance that Sebi has pointed out that they are going to be continuing to see on the weekly options expiries, on other indices as well beyond Nifty and the Nifty Bank too, to see if there is any kind of other signs of manipulation that has happened. Now, Sebi chief Mr. Tuhin Kantapande yesterday did reveal that they are going to be releasing the white paper. A study has come out as of late evening, which has now pointed out that 91% of the retail traders again have lost money in derivatives in FY25. They also have pointed out that the net losses of individual traders have widened by 41% to over 1.05 lakh crore rupees in FY25, and average losses per person in FY25 had increased to over 1 lakh rupees as well, from about 86,000 rupees in FY24. So there is this increased, worry with regards to whether retail investors are continuously losing against large hedge funds like Jane Street, operating with massive machines, algorithms, quant, which is impossible to compete against as a small retail investor. And what happens if such companies, they continue to trade in large quantities, thereby shifting the market moves. That's what was the big highlight point from Sebi's study as well. How are you reading into this, and what do you think an average retail investor must know from here?
Yeah. Yes, actually, I mean, look at it. The basic objective of market is price discovery based on future prospects of our company and providing enough liquidity to the investors who are there. And I mean, if you look into the Jane Street kind of a method which they have adopted, they use the muscle power of cash they were sitting on, and it was a blatant misuse of the system while within the time limit. So that is where the retail investors get trapped. It's like if you are lucky enough, you get into a moving train and you jump out of the moving train in between intraday, you could have
Yes.
made some gains. And then again, the greed increases. So first time you will make 0.5% or 0.25%, then you want 1%, then 3%. Sometimes you're lucky, and that is where the entire trap gets built into the system. And that's the reason why 9:1 kind of a ratio we are seeing on the losers and winner kind of a scenario. So SEBI, I mean, kudos to them, hats off to them. They have done a splendid job. But this will definitely do is, I mean, one of the news articles I was reading in a leading newspaper, it suggested that India is the largest derivative market in the world. So this kind of an activity with only 4 trillion kind of a market cap is always, raises your eyebrows and points finger to in the wrong direction. And that is what has come out. To my mind, the volume participation is definitely come down with lack of weekly expiries as well. And the volatility in the market, which we have been seeing 300 points instantly up in 15 minutes, and then you have seen days when 400, 500 points of Nifty cracked within 5, 7 minutes. So this kind of activity will stop. The volumes will come down for, I mean, stockbrokers. Loss of business will definitely be there, but it's good for the entire health of the market, where retail investors who were used to illusionary kind of trades will be back to real trades. And now, I mean, real price movements can be restored in the market if SEBI acts more strictly and scrutinizes it in a more detailed way.
Absolutely. Now, we do know that India is the world's largest derivatives markets, accounting for nearly 60% of the global equity derivatives trading. Volumes of 7.3 billion trades were recorded in April. The Futures Industry Association has marked out these data points for the media to consider. Now, we do know that after SEBI's allegations on Jane Street now plans to contest their findings by, of course, looking at any legal opportunities that they can seek at this point in time. Reuters has mentioned that they have accessed Jane Street's email to send to their employees, which mentioned that Jane Street believes they were beyond disappointed by Sebi's extremely inflammatory acquisitions, is what they have marked out in their email. And they are working for formal response too. Now, of course, this situation will be developing, and we'll keep on talking about as to what is the to and fro, how are the actions going to pan out between Sebi and Jane Street, and of course if there are any other companies that will get any warnings. But I think the big question is on the trading volumes in India. What some of the analysts have pointed out is that on Monday, the F&O turnover on NSE was at 91.4 trillion rupees, which is a 26% drop from the average of previous 12 Mondays. Similarly, last Friday's turnover, when Sebi had actually, talked about this ban with effect, Friday's volumes fell by 9% compared to previous 12 Fridays. Now, F&O volumes typically peak on Tuesdays and Thursdays due to the weekly contract expiries, and although experts still believe it's too early to really truly assess the impact. But Dharmesh, do you really see such large hedge funds which are practically contributing about 40-50% of the overall volumes, once they are absent from the trade, what does that mean for the overall market volumes? How will they be impacted? And will that also in turn impact retail?
Yeah, definitely market volumes will be impacted. It's likely to go down further because it's a cascading effect which happens. A lot of prop trading desks, a lot of high HNI individuals also participate, and their volumes also increases seeing the volatility because they all have the algorithms in place, and that algos get triggered. So, but here what SEBI is contesting is the basic origin of algo was not algo. It was a manipulated algo which, Jane Street was playing with. If it has been proved, then the balance of the algos gets triggered because of the Jane, initiating the system. So if that initiation point is not there, then definitely people, the algos will be triggered and volumes will automatically drop. So that's definitely is likely to happen, and we also seeing the drop in the volumes, and it's likely to drop further, going by the way things are happening, because once your expectation gets tempered, you participate.
If you like the video, do like, comment, share and subscribe.